Best ever listeners, welcome to the best real estate investing advice ever show. I'm Slocum Reed and I'm here with Danny Newberry. Danny is joining us from Vail, Colorado. He is the CEO of Vail Commercial Group, which focuses on repositioning shopping centers and industrial properties, as well as single tenant ground up commercial construction. Current portfolio, they are GPs of over 80 million in assets under management, and he is a returning guest almost 1900 episodes later. His first episode was 1005, why he prefers to buy shopping centers now, with Danny Newberry. Danny, can you tell us a little bit more about your background and what you've been doing for the last 1900-ish days?
Hey, I appreciate you having me on the show again. Happy to be back, and it's always a pleasure. So yeah, a lot has definitely happened in the last 2000 episodes, right? So obviously the economy has gone through some interesting times. We're definitely in a very interesting period as we speak. And, our main core focus has really been value add shopping centers around the country, as well as small bay industrial facilities. So we're currently in like 15 states. We've done about a couple $100 million in transactional volume. Right now, we're close to about 100 million in assets under management. Nice. And, we continue to review the portfolio on stuff that we hold for the long term versus stuff that we, fix it up, fill it up, and flip it. So we've got a little bit of two buckets is how we like to classify it. One is, hey, look at these are this is a really quality asset. We fixed it up, we filled it up, we got really good tenancy, we feel really good about it long term, especially going into maybe some downturns and some recessions around the corner. And so those ones, we set them, forget them, put long-term fixed financing in place, and enjoy the cash flow, right, and the amortization. The other bucket is really where we find a good deal. There's a ton of meat on the bone, but it may not be the highest quality asset, or the area may be not trending necessarily in the right direction, or it's stagnant. And so we know we can get in, fix it up very quickly, fill it up very quickly, add equity very quickly, and essentially flip out of it and make a nice gain. So that's typically what we've been doing. We've been trying to focus too a lot on the single tenant development, ground up construction deals. Right now we're currently doing a ground up build to suit for Starbucks. We're doing a 50-year ground lease with Panera Bread. We're working with Les Schwab Tires on another ground lease. So we're just, we've got lots of these little deals that those are more like coupon clippers. We set them in the portfolio and just hold on to them for the long term.
Man, Danny, I already have so many questions. Most of them are about, I'm an apartment owner operator in Cincinnati, Ohio, and a lot of people draw comparisons, but also point out the dissimilarities between things like shopping centers and light industrial and apartments. So, most of my questions here, I often the deals I'm buying are repositions of apartment buildings. Significant vacancy, often below 80%, and more heavy renovation required. So let's start there. When you're looking at repositioning a shopping center or a small bay industrial facility, let's start with some general numbers. What kind of timelines are you looking at for that reposition? Like, you close on January 1st. What is that year or year plus going to look like of getting through that process of repositioning?
Yeah, typically for us, we've actually tracked our numbers on our KPIs, and our normal turnaround time is about 12 to 16 months. So, and some are, quicker than that if there isn't that much heavy lifting. And so we have those kind of deals as well. But I would say like a large reposition where you're doing everything from the parking lot, you're doing landscaping, monument signage, you're doing, maybe painting the building and doing some parapets and some mezzanines, or you're doing new roof, new HVAC, just really kind of giving it an entire new fresh look and feel to the center or to the industrial building. So that may take some time. And then you have to go and reposition the spaces, because a lot of times there's either vacancy or you've got tenancy that's way below market rate rent. And so what we like to do is we like to find, call it on the small bay, short-term leases, and, do all the work, go into them and let them know, hey, look, we're going to bring you to market, but what's it going to take to keep you here for the long term, and sign, call it a 3, 5, 7, 10-year lease. And so we figure out what their needs are, what their wants are. And a lot of times it's hey, we need more office space, or hey, we want, stained concrete floors. We want AC in our unit. We need more space, less space, whatever it may be. And then when they go out to the market and see, hey, look, my landlord's doing a ton of work, but the rents are the same price right down the street, at an older facility. So typically they will stick around. And we create a great relationship with them for the long term. And so that's what we're looking for is, every deal is a little different, but 12 to, 18 months is really a solid time frame. And we're currently in the middle of a few of those deals. A couple of them we actually just took to market, because we're just getting a few that we're not looking to hold for the long term, and other ones that we're in the middle of a refinance. And so they're kind of all over the board.
Danny, I get that each of your repositions is going to be different, and the differences in yours are going to vary more than mine, for example, where apartments are a lot more homogenous, even than just shopping centers, much less non-residential commercial and some of the other stuff that you're getting yourself into. You said 12 to 16 months. Where are you after 12 to 16 months? Is that fully occupied? Quality tenants paying market rents, you've got a T3 and you're ready for a refinance, or you have financials to share with brokers, or what does it look like? Where are you after those 12 to 16 months?
Absolutely. Great question. So I'll just give you a quick example of one that we bought literally last June. It's a 28,000 square foot small bay industrial facility here in Colorado. And it was, owned by the original owners, went down to the trust. So the kids took over when the grandpa passed away. And, these guys had handshake deals with every one of their tenants at $5 a foot gross, no leases in place. There was about 15 tenants, about 2,500 square foot bays. And there was an additional 3.5 acres with the property. So what I did was I bought it for 1.7. We put about 350,000 into it. So we painted all the buildings, we fixed all the metal siding. So basically reskinned the buildings. We redid the parking lot, seal coat, stripe, crack fill, all of that. We did landscaping throughout the property. We put a new monument sign in. We put tenant signage, back channel lettering on all the tenants. And then on the 3.5 additional acres, we graded, graveled, fenced, and put a camera system on those acreages for outdoor commercial storage. And so we basically took all these $5 gross leases when we first bought the building, again, back last June. If you take what we were bringing in at that time, we were probably bringing in about 140,000 in total income. Today, we are bringing in approximately times 12, about 300,000 in nets. So essentially, I think we're somewhere around 260, 270,000 net base income, plus our CAMs, our triple net expenses, right? Because we converted everyone from gross leases to triple net. And for your listeners that are wondering what triple net is, that is where your tenant pays for taxes, insurance, and common area maintenance. So they'll pay their pro rata share of those costs. So you can bill those back to the tenants, and they're not a landlord responsibility. So based on that, our new NOI, we took the property out about 45 days ago. We're under contract to sell it at $4.25 million. So, we doubled up what we paid for it literally 13 months ago, right? So we'll probably net north of $2 million on that deal, and it's taking us 13 months to do.
Danny, in your space, 13 months, that's right in the timeline that you said. It sounds like an awesome deal. Do you do you reach peak performance with that asset, financially speaking, before you take it to market? Are you looking to have, a solid T3 or something like that, before some historical financials to share with brokers? Or is it like the moment the leases are signed, you're listing it?
Yeah, the moment the leases are signed, it's kind of like a Starbucks. I mean, you sign a lease with Starbucks, like the value is there. The building might not even be up, or they might just be getting started on the build pursuit, but you can go to any bank at that point and it's financeable. Now, with some of these mom and pop tenants, sometimes you do have to have some seasoning requirements. Typically it's a couple months, but because small bay industrial are more like apartment buildings. Every time you lose a tenant, there's 10 more guys, tradesmen ready to move in, and pay a higher rent than the last guy. And so they're treating it more that way. And because there's such high demand, we have been able to skip the seasoning requirements over the last few years and literally either take it to market or go in for a refinance immediately.
Wow. And is that because small bay industrial is experiencing similar supply demand crunch? I think that's what you were saying, that there just isn't nearly enough of it for all of the tradesmen and businesses that want to be in that space.
Well, if you look too at the trend, there's a ton of industrial being built, but it's not small bay industrial. It is manufacturing, it's logistics centers that are, the Amazon sized buildings, right? So you're not getting your electrician and your plumber and your carpenter and your small time auto guys and stuff that are taking those spaces. Those are all big national companies. And so the small bay, again, there is just a ton of demand for them. And there's not enough, and they're not building them anymore. So I think there's a lot of opportunity. And what we're finding is that the rents, just kind of like on apartments, the rents have been going up so rapidly over the last few years that you're seeing a lot of these properties where rents are just way below market. I mean, a lot of times we're seeing them, 30, 40, 50%, sometimes 100% below market. I mean, it's crazy. There's big gains to be made. And a lot of times you're signed, like a lot of landlords will sign 1-year leases with these people, just like apartments. What we do is we bring them to market, and then we like to lock in a 3-5+ year lease with these guys, because then it makes it a lot more stabilized on the open market, or when you go to refinance, you can get better terms on your loan.
And what kind of cap rate are you seeing on these sales now? We're recording in mid-July 2022. Interest rates increasing. I know that's affecting apartment investors greatly. But cap rates seem to be lagging. The growth in cap rates is lagging the growth in interest rates. What are you seeing in your space, Danny?
6 caps for this small bay stuff. I mean, we've got 2 deals under contract that are small bay, and they're both one's like a 6.25 and the other one's like a 6.15.
Is that where you're buying or where you're selling, or
that's
both?
where we're selling? No, we're not buying there. We're selling there.
Gotcha. That's what I thought you were saying. We just wanted to
everything
clarify.
we look for has to have huge upside. Otherwise, it just doesn't make sense for us. We feel like, look, if we have a huge spread on the equity piece of it, we can make a lot of mistakes, even going into a downturn in a recession where, hey, if you bought it for $2 million and I've got under contract to sell at 4.25. Well, even if it went down 50%, I'd still be equity. I'd still be in the equity position, right, on this deal, right? So it's not like I'd be underwater in any given case. So that's why we like these deals that have huge markups on the rents, on the actual facility itself by fixing it up. A lot of commercial owners just don't put the money back into their properties. A lot of them are, in their 60s, 70s, 80s. They're retired. The average person to actually get into commercial real estate is 48 years old. So if you think about it, they buy, in their late 40s, early 50s, and then they hold it for 10 or 20 years. And now they're in retirement age. And, that's when they look to, really scale down and do a lot less management. And they're just not pushing hard what, the young bucks can do to go in there and create value very quickly.
Speaking of creating value, Danny, a bit of an aside, we have a very sophisticated audience for the Best Ever podcast, and a lot of us are apartment investors. So, and the vast majority of those apartment investors are value add and not doing the kind of heavy repositioning that I do with apartments. Some of my deals, and it sounds like what you're doing from at least a construction, from a renovation development perspective with your deals. As an apartment investor who does serious value add and repositions, one of the questions that's coming to mind for me, coming from my perspective, and I hope a lot of our listeners' perspectives, when you know that you buy a building and you're planning to do significant work to it, you plan to increase the rents significantly, and you hope to keep your tenants. How and when do you broach that conversation with them? Are you telling your tenants the moment you buy it, you're raising rents, or are you doing some improvements first and then going back to them and renegotiating later? How does that, where is the nuance in that for you?
Yeah, I mean, what we let them know, first of all, is all the improvements we're going to do to the exterior, right? Hey, look, we're coming in, we're the new game in town. We want to make this property, a really great place for your business. We want it to be presentable. We want it to look great. We want it to feel great. We want people to feel safe here. So that's our first conversation, right? We introduce ourselves, and then we always say, hey, look, we love our tenants. We realize this is a win-win situation. If you can stay, we'd love for you to stay here. So what can we do to help your business grow? I mean, we've done this a lot where, hey, if you want, an interior remodel, you want certain things to help your business. Maybe it's even just more marketing, more, getting your name out there, whatever they're looking for. And we can kind of get a good idea of what it is they would like. And then we bid it out, right? A lot of times it's some capital improvements to their space. And we'll say, hey, look, how about this? We'll give you, a TI budget of, call it, $20,000. Okay, but I want you to sign a 5-year lease. I'm also going to give you 2 months of free rent. But here's the deal. I am going to take you to market, because that, I can't just throw all this money into this property and not get a return on that, right? And this is a win-win. I want to make this a great workplace for you. I want this to be a successful endeavor for your business. So let's make this win-win. I'm going to give a lot up front, and then you're going to pay it on the back end over the course of the lease, right? So we'll bake that back in. And obviously he's going to go around. A lot of times they'll go around and look at what the comparable rents are.
Of course.
And
yeah.
they're going
Everyone would
come back and say, well, shit, I could move over there, but they're not going to give me, brand new flooring, more office space, more warehouse space, whatever it is I'm looking for, along with some free rent. I mean, that sounds great. So a lot of times that's how we entice them. And obviously as they start to, some of them will be a little hesitant. They're like, look, we want to see the improvements get done first on the exterior, and then let's talk. And that's fine. No problem. We can do that.
Danny, I want to key in on that free rent for a couple of months. You're the first person in your industry, in your segment of commercial real estate investing, who I've heard bring that up. Let me present some assumptions I'm making about why you do that. Let's see if I've got this right, or correct me if I'm wrong for the benefit of our listeners. A couple of months of free rent makes it a lot easier for a tenant to handle a rent increase, because supposedly, if they're business owners, if they're good at saving money, that's going to help them they keep that money in the bank and then use it as they transition into having a nicer space, hopefully being able to increase their own revenue and pay an increased rent. What matters the most to you is how much this building is going to be worth after they sign that 3, 5, 7+ year lease. And so, the increased carry costs or the decreased revenue, or however you want to look at it in the short term, doesn't matter to you as much, because it's about what this thing is going to be worth and all the leases are signed. But it's also a big boon to your tenants in that it eases them through the transition of having a nicer place, potential for greater revenue, but paying that larger market rent and signing that longer lease. Am I correct here?
Absolutely. I mean, at the end of the day, look, if they don't want to pay it and they're going to move somewhere else, I'm going to have to be, it might take me another 30, 60,
The space
90
is
days
going to be
to
empty.
re-rent it anyways.
You're going to be rentless for a while anyways. Yeah.
Yeah. So it's a win-win because they love it. We're like, for us, it's like, well, if you left, that's the situation we'd be in the first place. So might as well just give it to you up front, along with, do some improvements to your space. Plus they're going to see all the exterior renovation getting done. And then the way we manage everything in-house. And so, we have a really good budget for repairs and maintenance, and obviously just keeping our properties looking really, really dialed in. So, I think our tenants really do appreciate that. Most of the properties we buy are pretty run down. I mean, they just, they do need a lot of work. There's hardly ever where we come in and it's like, well, we don't really have to do anything, right? This just doesn't necessarily happen very regularly for us, at least.
Totally. Yeah. And that's not your business model. You're not the one paying the premium for the spaces that are completely ready to go and get that market rate the way that the people that you're selling to are.
Exactly.
I have a question, but I want to dial into my point of comparison here as an apartment investor. So what I end up doing when my larger repositions have been C-class apartments. So blue collar, workforce housing. In Cincinnati, Ohio, this trend of $15 an hour and Amazon bringing a new warehouse, great for us, great for this community. All wages are increasing for these people. What I've come to do when I take over a property like that is I introduce to all of the tenants effectively my business plan, and not with necessarily these words, but I say, great to have you here. Happy to have you here. We are going to make this a nicer place to live. And as such, the rents will increase. Here are some of our plans. Here are some of the places that we're going to make your home a better place to live that merits a higher rent. My experience has been then we go into the business plan. And one of the reasons that we do it that way is that with Class C tenants, at least the way that I categorize Class C and what we're seeing in Cincinnati, respect and fairness are very high values in this community. And so if we started increasing rent on some people and not others, there would be the sentiment of disrespect may be enough that they wouldn't be able to overcome, and we'd lose quality tenants because they felt disrespected. We also do the same thing when we increase rents, just because the market has shifted. We announce the rent increase to everyone at the same time. And then for those who are locked into a year lease, we just say the increase is going up, it's mid-July, September 1st. Your lease isn't up until the end of January, so it doesn't affect you until February 1st, but we announce it for everyone to make sure that we're demonstrating respect and fairness across the board. I'm getting to my point. Give me just a moment longer. A little long-winded here, but my experience has been that since we don't raise the rent until we've done those major common area improvements, like you said, parking lots, monument signs, roofs, common areas, hallways, painting, take care of well-deferred landscaping and dumpsters and things like that. The moment we actually announce that we're increasing rent, that's when people start leaving. And we will have, I'd say 10% of the inherited tenant base leave immediately. And then another 10 to 20% of the tenant base may have trouble paying that higher rent, and we have to help them go. But our retention rate's pretty high because, we said we were going to add value. We demonstrated the value, and then they decided to stay. What is your retention rate like? And is there anything on any other points of comparison between my process and yours that you want to comment on, along with your retention rate for your tenants?
We don't really track the retention rate because every deal is so different. I mean, and we've got lots of different type of properties. Here's the thing, they're all value add, but I mean, I'm buying, majority of what I buy is retail and industrial, but I mean, I've got medical office, I've got land deals. We're working on a plethora of different type of asset classes where, you've got lots of different key metrics that you gotta watch. And so in the small bay stuff, it's been a pretty high retention rate because there's just not a lot of vacancy in the market. And so like
that makes sense.
So low, where are they going to go? And if you're in an area where you're the only game in town, or there's, a couple other places that are, in the immediate area, sometimes if they're a higher quality asset, they're even asking way more than we are. Right. So it all depends. Now you can go and sometimes find a crappy building, but a lot of times those are full too. Right. So we are not seeing a ton of, I would say probably 10% is a pretty good, I guess, delinquency rate that, when we first buy something and people don't want to stay. But for the most part, I feel like we can work out deals with these people. Retail's a little different though than industrial, right? So if you can't work it out there, there's a lot of different options when it comes to the retail side of things, depending on where you're at. And so, yeah, you may have to be a lot more aggressive on like your tenant improvement dollars and, your rent commencement date, and being able to deliver, a vanilla shell space with the exact dimensions that they need, right? So it's a lot more tenant specific than the small bay where you just got, it's like cookie cutter, just apartments, right? It's like you got a 10 by 10 box with a bathroom and a little office, and you're not really painting the walls, you're not really doing much unless they really want it. And then
Danny, are you white boxing your vacant stuff, making it really nice and presentable before you lease it?
We try to, yeah. I mean, sometimes though, like if we know vacancies coming up, we will get it out there, and sometimes it's rented before the tenant ever leaves. So then we don't do anything unless they ask specifically, like, hey, will you do this? And then we're like, oh yeah, no problem.
I don't know what's happened in the last couple of years, but my tenant base has absolutely lost its sense of imagination. I can't show an apartment until it's absolutely 100% completely ready. Even if I have, say, like 3 vacancies in one building, and I have one that's in pristine condition, ready to be moved into, but I've already got a lease signed for it, I'll show it first. My team will explain to the prospect, hey, I just want to show you what these apartments look like. This one's already leased. I've got a couple others if you want to see them. And they walk in and they haven't been painted yet, or we're in the process of, like replacing a cabinet or something like that. And we lose the tenant because that apartment wasn't perfect and they can't see past current issues, even when I showed them what the result will look like before they're ready to move in. And I've heard actually that the exact same thing that you just said from other investors in your space, that the preference is show it while there's an operating business inside, because showing what the space looks like with an active business in operation is best. But the moment it's empty, you got to white box it. These people are entrepreneurs. That doesn't mean they can imagine themselves in a dirty space. Is that your experience?
I mean, for it's less on the industrial. I'll tell you one thing: office and medical office for sure. If you don't have
That makes sense, yeah.
spec'd out space that they walk into, and but if it's vanilla and or just like things are everywhere and old cabinets, I mean, yeah, it's really tough to lease office space that way. So that for sure needs to be vanilla shelled or spec'd out. And then on the small bay, believe it or not, these contractors don't care if it like doesn't look that great. But what we try and do immediately upon someone moving out, if we haven't pre-rented it, is yes, we'll paint all the walls white. We'll typically try and do like a stained concrete and just do a clean. I mean, clean the bathrooms, clean the office, maybe change out the carpet, and that's about it. I mean, there's not a lot to do. So at the end of the day, I guess the last thing is we have been upgrading to LED lighting within the spaces. So that's another thing we typically like to do, but don't see it as much where people don't, it's just a box, right? So it's a little bit different than your living quarters, right? Now on the retail side of things, yeah, you don't want to go too far because every tenant has a specific build out. So what they want to know is, do you have the right amount of space that I can build out my specific need, right? So you definitely don't want to spec out retail. Vanilla boxing it is perfect. That's fine. Just make sure it's clean and it's open. And then from there, you let them tell you exactly what they need and how they need it. And then usually you either give them a turnkey build out or you give them a TI budget and they do it themselves. And then you release funds as they get, finish the process.
Danny, I wish I had another hour to grill you with these questions and do a little more more listening than talking. I feel like I did a lot of talking there towards the end, but this is a shorter form podcast. You've been on the show before. We're not supposed to do the best ever lightning round typically, but are you ready for an abbreviated best ever lightning round?
Sure. Yeah, let's do it.
Awesome. What is the best ever book you recently read?
Oh, man, there's so many good ones out there.
What was the last book you recently read?
Well, the last one I read actually ended up being the one that Who Not How. So Who Not How
I did that too. Yeah.
That was such a great book because instead of doing everything yourself, find people that are great at the things you're not great at and only focus your attention on what you are specifically amazing at. Everything else should be essentially put off onto other experts. So definitely got a lot out of that book for sure.
Absolutely. Only one more lightning round question, Danny. In your commercial real estate investing career thus far, what is the biggest mistake you've made? The best ever lesson that resulted from it?
Yeah, I would say, I think go bigger, faster.
Can you give us a concrete example of that? I'm looking for a problem here, Danny. We've talked for a while about how everything has looked great with your portfolio. I'm not telling you to tell me what you do wrong, but give us some value here, something that the best ever audience can learn from a mistake that you've made.
Hiring A players, right? So you want to really build a team. And that's what I mean when I say go bigger, faster. Like, you can't afford to build a team if you don't have the income, the cash flow, the cash behind you to do it. So if you can, if you have a scenario that's worked and you can repeat it, right? Or you can buy something, you can fix it up and you can fill it up and you can create enormous value. I think doing that as quick as possible, so that way you can afford to have the best people on your team, is really number one, going to create way more sustainability. You're going to have more freedom ultimately, not up front, because you got to build it, right? You got to build the infrastructure and build the team. But once you do, man, you just let people be their best and help grow your company. You're going to go a long ways, a lot faster. So I was a big proponent of going bigger, faster, and building that team. And now that I have that team, it's really great. And we've slowed down a lot on the acquisitions just based on where we're at in the economy, but we still have great strategies and even better strategies during tough times. So we're really excited for what's ahead.
Awesome. Danny, where can people get in touch with you?
ValeCommercialGroup.com is our website. And, if anyone's ever looking to JV on a retail or, industrial facility, we're always looking at joint ventures, partnerships. If anyone's interested in getting involved in in the syndication deal, we do those as well. We're kind of doing a little bit of everything.
Awesome. The links are available in the show notes as well. Danny, thank you. Best ever listeners, thank you as well. If you've gained value from listening to this conversation about repositioning shopping centers, small bay industrial, medical office, and other similar assets, please do subscribe to our show. Leave us a 5-star review and share this episode with another investor that we can add value to through this conversation. Thank you and have a best ever day.